Hey guys, thanks for joining us today. Today's webinar topic is my accountant's guide to buying a practice. A little bit of background why we've decided to do this. It's just so important that associates get the right advice when buying a practice. Certainly worked with a lot of different associates over the years buying a practice, and having the right advice really does make a lot of difference to make the right decision and to make sure the process is done as smoothly as possible. And by being as smooth as possible, that can make the difference between the deal going ahead or not, especially when some of the more difficult questions are asked later on as opposed to soon on in the process. So we put this together today, and I'll run through some of our key areas to think about. So as a short overview, if you are thinking of buying a dental practice, that is great news. It is a fantastic journey to go on. It is a process, and each part of the process, there are different things to think about, and there are key pitfalls to look out for. As I mentioned at the start, we've taken this journey with many of our clients, so we know all about the things that you've got to think about at each part of the jigsaw puzzle. Firstly, I would always advise, do get a valuation. It is a second opinion. It is somebody who's not connected to the deal telling you whether they think the business is worth the asking price. There is certainly a big gap between the asking price and the final price for many of the other brokers out there. Recently, the NASDAQ, which is a group of dental accountants and dental lawyers, published a report in March 2017 to show that the gap between asking price and the final price is getting bigger. So even more reason to get pen and paper, get somebody to physically value it and say it's based on the profits, based on your returns, this is what it is worth. Next, have a financial appraisal done. Have you assessed what your finances will look like after you've bought the business? A big part of this equation is the bank. Most of you will need a bank loan to buy the practice. How much will you need to pay the bank back? The figures you pay to the bank are interest and capital. Capital isn't tax deductible, so you will have a large amount of outgoings after you buy this. Is it enough to live off? Get that valuation done. Next, think about deferred consideration. A practice is certainly not a cheap asset, and the last thing you want to do is pay a lot of money over to somebody and then not protect yourself going forward. Now, there'll be certain legal protections that your lawyers will provide you within the sale contract. However, it's paramount for yourself to ensure continuity of fee income. Often that can mean tying in the current principal. That's more so the case within private practice, where the principal is the practice, and having a level of deferred consideration. And deferred consideration just means you don't pay 100% on day one. You pay 70, 80, or whatever is negotiated, with the remaining deferred consideration, the remaining money paid over 3, 4, 5 year period. That protects you to make sure the fee income stays the same. Now, financial due diligence. Do you need it? What is it? Financial due diligence is a process that an accountant will do. It is more applicable for big companies, but let's answer what is it? So it's when an accountant goes to a target business and they thoroughly analyze the accounts, the profit and loss account, and the balance sheet, and test those figures to test whether they are accurate and are there any things in there that need to be raised as potential problems. So that's what it is. Do you need it? I would say it's 50-50. Smaller practices are quite black and white. What's in the profit and loss account, what's in the balance sheet? So possibly not. For the larger practices out there, certainly I would say yes, you do. We do need to look at the balance sheet very closely, understand the aging of certain items on there, and that can affect the profit and loss account as well. And it can also give you key insight into the management of that business. And that is very valuable once you do eventually become the business owner and in the driving seat. Related to that is, do you need a net asset adjustment? probably doesn't mean a lot to you right now, but when you are buying a company, you buy that company with all of its assets and all of its liabilities. And it's very important that when you agree a price, that price is adjusted for any negative liabilities that you inherit. And the obvious one is the company's corporation tax. There should be an adjustment that says when you buy, you pay whatever plus less deferred consideration, less an adjustment for things that are not your problem, tax that is has accrued before your time of owning that business. Very important to think about that, but it's more so for when you buy a practice as a limited company. Next, but certainly very important, tax planning. What vehicle should you use to buy the practice? If you're a sole trader now, should you buy it as a sole trader? Or should you use a limited company? And if you're a limited company now, should you buy it through your limited company as an associate? Very important to ask, and it's very important to ask early on in the process, as the lawyers will need to be told, and they will need to factor that into the sale contract very early on. It's harder to change the contract when you're close to completing, so ask that question very early on. My basic advice to people is if you are a sole trader now, continue to be a sole trader because of certain tax reliefs that won't be available as a company. That will change, however, depending on your personal situation and what happens in the near future regarding corporation tax. Can't go too much into tax on this webinar. It is a very personal and specific bit of planning. Just trying to flag, don't leave it to the last minute. Ask that question very early on, and your accountant can run through certain different scenarios and give you some certain advice and figures for a company or a non-company. And then seek professional help. Use a dental accountant. Use somebody who knows dentistry, who understands how an associate-led practice works, how a principal-led practice works, someone who understands clinical profits and how to account for those and forecast them. Your accountant will be very important in this process. And it's too often the case they are told too late in that process, but hopefully from today you can see the important questions that do need to be answered and discussed as soon as possible. As always, we are ready to take your calls and speak with you. My email address is there, or you can contact us via our number on the website. Thank you very much for listening, and those of you who are buying a practice, I wish you all the best and hope to hear from you soon. Thanks. Bye-bye.